everybody, great to see you here. So, let me see. Let me first quickly, as a disclaimer for this live stream, as usual, I mentioned all this information is basically for educational purposes only. So when you trade, please do at your own risk. And also, since this is live stream, if you can please follow the rules and guidelines in the chat, that would be great. And also, recently, there are many scammers out there using my name and creating fake accounts and scamming people. So just be careful. I don't do Telegram or Instagram, Facebook. I never send direct messages on SNS. So please be careful. So, yeah, let's see. All right, I see people keep joining here now. Thank you for joining. Great to see you. All right. Yeah, live stream looks healthy now. Yeah, it's working great. So yeah, I really don't know what happened yesterday, but today looks like it's stable. Yeah, but in case if there's any issues, please let me know in the chat, then I will look into it. All right, Val and Augustine, Butha, and T2, JYs, Jong On, and John Hera, William, and Toko. Good to see you. Thank you for joining, everybody. All right, so let me switch to trading view. Here. And so I'm actually on the USDJPY. Still running some profits, I guess, right now. Hold on. I bought USDJPY today at the price level of 121.417. So still holding the trade. I'm trading the profits on USDJPY. But looks like the JPY is strong, very weak today. So we see another trend on USDJPY. And I was also looking for the trading edge on CADJPY. So if you took one of these pairs, either USDJPY or CADJPY, then you must be making profits by now. But other than that, let me check some information. So let me first look at the strength chart as of now and see which one is strong, which one is weak at this moment. So let me switch to trading, switch to currency strength chart and refresh the page. Usually when I open, it's kind of blank, and I refresh and I can show the latest strength chart. So according to this, right now, CAD is very strong and JPY is very weak. So at a glance, we know that CADJPY is the most volatile market, the strongest uptrend. And the second strongest one is AUDJPY. So AUDJPY must be trending up, and then USDJPY is also trending up. So first, let me look into these three pairs. Once again, CADJPY and USDJPY and USDJPY and AUDJPY. Yeah, so these three pairs, we'll look into it. Oh, I've seen many comments about making profits on USDJPY and AUDJPY. That's good, yes. If you follow my strategy and if you follow the trend directions, you should be making profits today. In the month of March, was very active. And I think, based on my experience for the last 8 or 9 years of my trading experience, this month is unusual. In Forex, it's unusually trending up or down. So this is when trend follow strategy works the best. So first, let me talk about the CADJPY. This is the strongest market at the moment. And you can see that this is in the forward chart. But if you look at the daily time frame, you see this is strongly bullish. And in terms of this CADJPY, I said that the Kumo is very thin, so it may retrace backwards. So that's why I put this as a low priority. But we can still follow the forward chart, because in the forward chart, it's stable Kumo here. So instead of taking the daily time frame, we can follow the 4-hour chart direction. So right now, the market has been above the Tenkan-sen, which is actually showing the strongest market. Whenever you see the market above Tenkan-sen and keeps going up this way, this is the strongest market, stable market. And the stability is actually captured by this Kumo thickness. If you see the Kumo thick like this and long after the previous Kumo twist, this is a strong bullish trend. And Chikou span is also nice and above candles, so this is a stable uptrend confirmation. So we can still continue to follow the 4-hour chart uptrend and CADJPY. And obviously 1 hour is uptrending because it renews higher now. 1 hour is uptrending. And in the 5-minute chart, this is what I usually look for, an entry chance in the 5-minute chart. And then if I look at it, looks like 5-minute chart is now, shooting up all the way. So I think we better wait for the retracement. And you see, in this case, stochastics is, kind of retracing backwards. The blue line is retracing backwards. So the market is losing its uptrend right now, if I see this at a glance. So it may pull back. So in this case, I wait for the pullback and push back to buy. I would wait for the next gold cross of stochastics or wait for the next pushback, Fibonacci bounce or counter trend line breakout. Or if it keeps retracing backwards, then a Bollinger Bands may squeeze, and that might be another confirmation to buy, because once it expands, it tends to go towards a major direction like this way. So yeah, CADJPY is nicely bullish, but right now I would still stay away from this one. Wait for the retracement. But if you just keep going up, then you can just stay away, keep staying away, and focus on other JPY pairs. So in the next one I will look at is the USDJPY. USDJPY in the daily chart, this one looks better, Kumo, than the CADJPY. If we can compare again, let me split the window into two. And on the left, I put the USDJPY. So this is, the Kumo looks like this. And on the right, let me put the CADJPY. And if you compare these two Kumo in the same time frame, you see the CADJPY Kumo still looks very thin, much thinner than the USDJPY. So that means USDJPY has a stable uptrend in the long term than CADJPY. So I still prefer to monitor the USDJPY. But we had another trending pair, which was AUDJPY. So let me replace CADJPY to AUDJPY and look at the Kumo. Right, so if you look at the AUDJPY Kumo, this one is also looks healthy, not too thin, not too thin. So if I see these, three pairs trending at the same time, then I would most likely take either AUDJPY or USDJPY to trade. In the long term, it should be continuously moving up on this, based on this daily time frame. So so let me look into the USDJPY first. So I will put it back into just one screen. So let me see. I go down to the 1 hour time frame. And so the market has been bullish now. It just broke the resistance about 1 hour ago, and now still bullish now. Kumo has been stably bullish too. And a Chikou span above candles, and Kijun Sen is pointing upwards. And this is a nice confirmation to look for the buy chance continuously. And then I go down to the 5-minute chart. And in fact, this red vertical line is where exactly I took the buy. it was 121.42. I took the buy here. So let me explain how I took that buy. I got these questions also. So I took this buy here, and that's because I took this multiple confirmations. I took first this when I see the retracement, and on this bullish candlestick, I saw that this is the beginning of the new uptrend in the 5-minute chart, because higher time frames were bullish. In the 4-hour chart was bullish, a 1-hour chart was also bullish. So probability-wise, in the 5-minute chart, it tends to break the resistance and goes up towards major direction, because market usually follows higher time frame direction. So that's one of the confirmations. When I saw this bullish candle, that was a sign of the continuous uptrend. And then also I saw that the market actually came within the Bollinger Band's deviation 1, 2, and that was my second confirmation. Because Bollinger Band between 1, 2 deviations is like this is like a stream uptrend in the river, so to speak. So when the market comes into the area between deviation 1, 2, it's like a stream, so the market tends to go up very fast. So this is what I call the band walking, and I took that also as another confirmation. And I also watched this little doji candle. There's a small doji candlestick, and the doji candlestick broke bullish towards major direction. This is about the price action. Let me enlarge the chart and exactly what I see here. This is very important also whenever you trade by the price action, because let me delete these indicators for now. And if you see this, there are 3 dojis, 1 and 2 and 3 dojis, and the previous dojis has been broken against the major direction. So the first doji, if you look at this, the next candlestick close became below the previous doji, and this is against the major direction. So you can't take this as a confirmation to buy, because once again, this is against the major direction. You have to always take confirmations along with the trend confirmations, trend direction in higher time frame, then most likely that will be true. So I didn't take these doji breaks against major direction, but the third one here, this was exactly what I was waiting for. The market broke the doji towards the bullish direction, and that was exactly my entry confirmation too. So when I monitored the chart, it didn't break the resistance yet. The resistance in 5-minute chart at that time was here, but it didn't break. So, but before the breakout happens, I like to buy so that once the market breaks, it goes very fast like this. But to expect the breakout towards major direction in the 5-minute chart, you have to capture this kind of indications by the price actions or the indicator confirmations or any sort of confirmations like this. This is what I call the trading edge. We have to always look for an edge to buy or edge to sell. So here I exactly captured the edge, and that's why I took the buy. And afterwards, as a result, it went bullish. But it may have been retraced backwards too. So once it retraces backwards, what I was thinking in my head was, if the market creates double top and breaks neckline, that will be my exit timing, because it violates the previous doji. And if the doji has been broken bearish as original confirmation, then I will most likely exit in the 5-minute chart. And that's why my exits are very quick. I don't keep holding the market retraces until the market hit the stop loss. my original stop loss was 22 pips below, so that was around here. I took the stop loss here, and so if I exit by this double top, reverse confirmation, a neckline break of the on the 5-minute chart, I usually take 2% risk to stop loss, 2%, and this is my SL, this is my buy. If I exit here, that will be less than 1% drawdown, which is acceptable for myself. This is very small drawdowns. But still, I buy here and expect the market goes towards major direction because this was an edge. So trading is all about the probability. And we can't see the future, but we can analyze the future like this by price actions, multiple time frames, and you only take trades on these high probability edges so that overall trades should be profitable. You might have some losses along the way, but these losses should be very small because you are trading on the edges after all. And if it reverses, simply you exit with no emotion. So yeah, because I got this questions like, why do you take that stop loss so tight? Like 20 pips stop loss is tight, like 30 pips stop loss, isn't it too tight? I got these questions, but this is actually one of the reasons why I like to have the tight stop loss. The other reason why I want to have the tight stop loss is that it's time efficient. And what I mean by time efficient is that if the market reverses backwards and breaks a neckline, it happens maybe in about 20 or 30 minutes when it reverses. So I can decide in 30 minutes to exit this trade. But if I have to sit down and wait for like 1 hour or 2 hours to decide whether I exit or not, then it is not time efficient because you are in drawdown. You have been running some losses for a couple of hours, and you might not want to take trades on other pairs, other markets. But by exiting quickly, then you can clear a mindset and you can reset your emotion and ready to trade on another pair. And that's why exit quick is very time efficient in that way. So and also, I put that stop loss very tight as possible, like less than 35 pips usually, because so that I can go for bigger lot sizing with the same risk to percent. If stop loss is double, let's say in this case I took 22 pips of stop loss, but let's say if your stop loss is all the way down, like 44 pips, let's say, then I have to, take like a double. I have to take, half of a lot size to make it 2% to the 44 pips of stop loss. I'm taking the same risk. Still 2% is my rule for trade, but I have to decrease the lot size. So even if the market goes towards my direction, my winning profit will be half than taking 22 pips of stop loss with the same risk. So from this reason, I prefer to have a tight stop loss so that I can go for bigger lot sizing with the same risk. And once the market reverses backwards, I can cut the loss very quickly. And this is very time efficient, very effective trading strategy in terms of risk management. So yeah, sorry, I talk about lots about risk management, but this is, I think, important information. So I just wanted to share today. So, but anyways, behind that logic, I took the buy, and yeah, it happened that the market went back. It went towards my direction without retracing, and that's why I just keep holding the trade. So usually I take 2 trades. So I took 2 trades here, and then my original stop loss is here. This was my original stop loss, and once I saw the market runs above 30 pips, so this place when I measured, it was over 30 pips or exactly on the 30 pips or 31 pips of running profit. Then I move the stop loss to break even, slightly above the position. You have to put the stop loss slightly above the position. In the, you know the reason why? You know the reason why I put the stop loss slightly above the position? If you know, then please let me know in the comment. I put the stop loss slightly above the position, and then so that even if the market retraces backwards, I can exit with a break even. So this was my break even timing on these two trades. So I had two stop losses here. And then I left home. I was meeting one of the Ichimoku members at the mall, and then came back, and then I had another one-on-one meeting with the GTS member. So in between these two meetings, I looked at the chart, and actually it was when I was doing the meeting with the GTS member, I saw the market retrace backwards. I saw the small bearish wave broke the support. So this is when I exited on one of these trades. I exited with a 17 pips profit and exited. But the other stop loss, I kept it at the break even, and the reason is because the forward chart was still trending up. The forward chart was still trending up, so I kept holding another stop loss here at the break even. Because in the forward chart it's still bullish, and that means in the 5-minute chart it may seem to retracing, but in the forward chart it's bullish. So at some point it should go up in the long term, but we never know when it will go up. It may go up after the market hit the break even like this, or it may go up without hitting the stop loss. Without hitting the break even, it may go up. But we cannot know. We don't know. We have no control over these situations. But since forward chart is still bullish, I kept it at the break even, and if it hit it, I just take it because I don't lose anyways. So no damage for my account. So afterwards, it just happened that the market went upwards towards the major direction. So this original stop loss, this break even was still alive and kept holding until now. And the market is going up, and I am running a profit of, from here, running profit of 42 pips now. So this is how I took the trade and what I am right now. So yeah, I think this is my strategy, and I built this strategy by my own. So I think this is something you never heard before. It might be confusing if you're new to my live stream, but this is basically how I trade. So first priority is to risk, to risk management, risk less. Take a small risk a trade, as small as possible. But once the market goes towards major direction, you keep holding a trade. Especially after break even, you don't lose. So psychologically, it's safe. Even the market retraces backwards here like this after 30 pips of running profit, I don't think I lost these pips. For some of you, I think if the market retraces backwards to break even after running 30 pips, you might think that, oh, I lost 30 pips. But that's an illusion. That's an illusion. The healthy mindset should be non-losing trade. If you don't lose, then you should be happy. The market is not really taking anything from you. So you should be healthy to look for another trading edge. So okay, so that's right. John Hera, movie hero, and Hergao says about the thread. Yes. So I put the break even, I put the stop loss slightly above the position to cover the spread, because I'm paying the spread when I take a trade, I pay 2 or 3 pips of spread to the broker. So if I put the stop loss exactly on the position, then I will lose 2 pips or 3 pips. So technically it's a loss. But if I put it slightly above, like 2 or 3 pips above, then it can cover the spread, and technically you don't lose. When you buy in Forex, you pay spread. When you sell, you pay spread when you exit. So when I buy, I always make sure to put the stop loss above the position. If you sell, you can put the stop loss exactly on the position, that's fine. But to be safer, you better place the stop loss slightly below the position when you sell also. But especially when you buy, you have to put the stop loss slightly above is a trick. Important thing. You know, this is only 2 or 3 pips, but if you keep getting break-evens, like 10 break-evens, then that will be 20 or 30 pips of loss, which is quite big. Right? So these small portions, small things are very, very important. Especially if you want to keep trading, small errors can be, you know, big in the future if it accumulates over time. So yeah, this is very important. So now I'm actually running about 39.40 pips in profit. So I moved the stop loss to here, previous low. This was the beginning of the new uptrend. I moved the stop loss 121.59. And what I'm looking for is, what I'm waiting for is the market breaks higher this way. Once the market breaks the new high in the 5-minute chart, which is 121.99, or the round number of 122, excuse me, then I will move the stop loss to below the previous support in 5, which is 121.81, and I would fix the 37 pips of profit and keep holding the buy as it continues to go up in the 4-hour chart basis. But yeah, this is what I basically do every day. So I happen to have positions right now, so I'm just sharing that with everybody. I have the screenshots just in case for the proof. So this was my original entry. I took, so once again, if you are joining newly, I am actually buying the USDJPY, and I took these 4 confirmations basically. When I saw that market, 4-hour chart was nicely and healthy uptrend with the Kumo direction, and 1-hour chart was also bullish, close span above candles. And then in 5-minute chart, I took these Fibonacci bounce. Yeah, I forgot to say this. Fibonacci bounce I took. And then this doji breakout as second. And third, this is called a counter trend line breakout. Same as a potential future N wave. And then band walking is a 4th confirmation. In this case, I didn't take the stochastics because it's dead crossing. When it's dead crossing, then I just ignore stochastics. So I took these 4 confirmations for entry. And then next I took, so this was originally when I took the trade. I took 22 pips of stop loss. Yeah, 22 pips, sorry. 22 pips of stop loss I took for these 2 positions. And then when I run the 30 pips, when I run 30 pips of profit, then I moved the stop losses. Originally was here, stop losses to break even. To break even, this is the timing. When I said the break even, this is MT5 platform. I trade by the MT5. And then afterwards, I left the chart. I had the meeting with one of the Ichimoku members at the mall, and then came back and I was actually meeting with one of the GTS members in Skype. And then, okay, where's that? And then I exited. Oh, I think I didn't take the screenshot for the exit on one of these trades. Oh, there you go. Yeah, so this was a screenshot when I exited the trade. So this was, yeah, so this was when I said the break even. This is break even. And I just let it go. And the market retraced backwards, but I didn't exit here because both the 4-hour chart and 1-hour chart were bullish. So I didn't exit. If the market retraces, I would just exit with a break even and I don't lose. But afterwards, since the market is still trending up in higher time frames, it went up and created range. So the whole time I was leaving the chart. And I came back to home around this time and started my conversation. So this is when I came back to home. I just put home. So during the whole time, I left it. So I didn't realize this retracement anyways. I didn't realize. After I set the break even, basically I leave chart for a couple of hours. So I left the chart from here to here and came back home and I saw this. So, and as I was speaking with the GTS member, I saw the retracement and 5-minute chart dropped down, broke the support of the previous, support in the 5-minute chart. Previous double bottom was broken bearish. And when I saw that, I exited manually. So you see this is a 121.59, was exactly when I exited the trade. This was my exit. And I left the other stop loss at the break even. And once again, that is because still higher time frame is bullish, was bullish. So if the market retraces backwards and hit the break even, it's okay because I don't lose once again. So because I know that every time if I trade with a break even or win game, then I should be winning over time. Even if a couple of trades could be break even, retrace backwards break even, I don't lose. But the market still potentially goes up because higher time frame is bullish, no reason to exit, only the other one. And then here I am now. This is here I am now. So this is a very important mindset. As a trend follower, if you are also a trend follower, then never exit if higher time frame is too bullish. You can exit one of the trades, one of the positions, but the other one, you have to keep at the break even. Otherwise, you can't run huge pips along the way. Like when you exit, it's more like here. If you keep exiting like this in these timings, then you can't run huge profits along the way. You have to monitor chart the whole time, and you have stress. You might have second thoughts. Should I exit or not? And it's not really healthy psychologically, emotionally. So you have to train yourself to let the market go without monitoring. And then, you can run huge profits over time. But in terms of the exit, you have to monitor the chart. You have to monitor the chart because the market may retrace backwards so soon. Like here, the market may create double top and it might reverse backwards. And when it breaks the neckline, then it may continue to be bearish. So you have to see this because you're still potentially lose on the trade. But after the break even, nothing to worry about. You just keep holding and holding, and as long as higher time frames too bullish, is my mindset. But it took me at least 3 years to be able to think like this. And after even 3 years, I had to train myself. I had to run the Forex tester. I had to trial profits in the tester and also the real trades to be able to keep holding a trade. So yeah, I think at some point I think we have to let the market go and we have to stay away from the chart. When you are trading, because if you keep watching the chart, then you might think, should I exit or not? Should I look for another pair to trade? You have these, different minds, different ideas. You might want to change your strategy. Instead of using one specific strategy, you might think to try the other strategy. And you might change around the strategies. And you might not be so consistent in your trades. So yeah, anyways, that's how I am right now. And it's about to break the resistance in the 5, which is 122 round number. So once it breaks, I will move it to the previous pushback in the 5 minute and fix that profit. Yeah. Kush says, to me, break even feels like a loss. Yeah. I used to think like that too, yes. I thought break even is like at least not a profitable, so I thought it's a loss. Especially if it happens like this, after running 30 pips, set the break even, retrace, and hit the break even. I thought this is a loss. So but this is about psychology. Yes, it's about psychology. Let's say I give you $100 for free. I just give you $100, and let's say the $100, let's say it's stolen at the park. Let's say, then you might think that you lose $100, but you didn't lose from the beginning anything because you got this $100 for free. So technically you didn't lose, but emotionally you feel you lost it. So you have to train yourself to have this, the healthy mindset towards the break even. Yeah, we feel more pain in the losses than the wins. It said that we have to have like a double or at least 1.5 times profit than the losses to be break even emotionally. Let's say you lose $100, and even if you gain another $100 in a trade on the next trade, technically in number it's break even, but psychologically it's not break even. You have to win at least $150 to make it break even psychologically. And that's why we all talk about losses, and we all think about losses as painful. So there's psychological imbalance between losses and wins in terms of emotion. So we have to see numbers. Numbers are everything in Forex or any tradings. Yeah, no emotion in numbers. Yeah, psychology is so important. Yes, that's right. That's right. Oscar says, if the trend keeps uptrending, would you consider a new buy or just keep moving the stop loss? Yeah, I can consider a new buy, yes. But usually, I prefer to let it go unless I see another great setup. Yeah, but yeah, I'm open. I don't lose anymore, so I can look for another trading opportunity. Okay. Movie Hero says, but if you took 2 trades per once and the market goes opposite direction, it loses double stop loss per once. So that's why you always took 3 to 4 factor to confirmation entry. Yeah, that is true. Before, I used to take only 1 confirmation. So coming back to this entry edge topic, like previously, I would only take, let's say, Fibonacci bounce for the confirmation. And I tried the Fibonacci confirmation, took the buy, but for some reason, reversed backwards. And I didn't know where to exit. Simply, I thought I just, the market retraces backwards, but let's hope that it doesn't hit the stop. And then it does. It does stop. So that was when I took only 1 confirmation. So I was always thinking how to avoid these fake outs, like fake signals. And then I came up with the idea, okay, so why not taking the other confirmation? So I take Fibonacci bounce, and then what else I can see? And then I studied the price action, for example, and then I took the price action for another confirmation, like this doji break towards the major direction. I took that as the second confirmation. So the probability, gets better in this way. And then, you may be also be able to take this, the band walk confirmation. Before, I used to take only band walk. Every time the market is in between deviation 1, 2, I just buy. And the market retraces backwards very fast. And I didn't know reason why. And I didn't know where to exit. But after I took multiple confirmations like this, it not only gives me high probability, winning trade, but also I could wait. I could wait to analyze. I could wait until I enter the market. It stops me from entering too soon, jumping into market. So that was very helpful. And also, when it comes to exit, I know exactly when to exit. Once these confirmations are violated, that's basically when I exit. So I take opposite signals from buying signal as exit confirmation in the 5-minute chart. So, and that's how I built my strategy like this. So my entries are very precise. I don't enter by emotion. I don't enter just because the market is going up. I don't enter just because the market breaks. I don't enter usually. And it gives me confidence and logic behind, which makes me comfortable to trade. Yeah, and for the stop loss, I take 2 positions and I take 2 stop losses originally. So I take 1% each. And on two positions, I take 2% risk, 1% each. Okay, let me see some other ones. Marcus says, I TP with 33 pips, but I miss out another 50 pips. The emotion part really is crucial. Yes, that's true. Once the BNF is a great trader in Japan, and he says, even when you lose, it's painful emotionally because physically you lose. But even if you win, it's painful because after our exit, the market just takes off. And when you see it, you feel you miss a chance. So in trading both ways, when you exit with a loss, when you exit with a profit, both ways, it's painful anyways. That's what he says. But I think that's true. I think that's true. Emotionally, it's all about a psychology game. But the healthy mindset should be, it's okay because tomorrow will come. You will look for another entry chance and simply trade. But never try to win back the losing 50 pips. Never try to do that. Never target to 50 pips on the next trade. Never do that. Hergao says, trading is number games. Don't focus on just one trade. Do a series of 20 trades. If winning rate is 70% and winning percentage is bigger than losing percentage, that is consistency. Yeah, that's true. That's true. It's all about numbers. All about numbers. Because numbers won't lie. You know, but we can lie to ourselves. We can lie to our emotion. We can think as we like. So we can deceive ourselves in terms of perspective and emotion. So the true enemy is ourselves, not the market. Okay, so I see two comments about two markets. One is USDJPY this moment, 1 hour time frame. Is it okay to enter? And the other one is AUD USD and see how you would enter in the 5-minute chart. Okay, so let me look at these two pairs now. So one is AUD JPY quickly, because I will end the live in about 5 minutes. So let me quickly give you these two analysis and end the live. So AUD JPY, daily is up, power chart is also up, nice and healthy Kumo. And in 1 hour, it's also bullish. I will look for the buy in 5. So let me see. If I look at the 5-minute chart, then oh, there was a nice pushback, I realized. Nice breakout of the resistance. So yeah, you can, I think you can buy now. Put the stop loss here at 91.28. If you buy right now, then that will be, let's see, about 40 pips, 41 pips of stop loss. 41 pips of stop loss is a bit too wide for me, so I don't think I will take that. I will prefer to look at other market to be in, so that I can go for higher lot sizing with the same risk. So let me go to AUD USD just to compare. Once again, AUD USD in the daily chart is bullish. Power chart is also bullish. In 1 hour is also bullish. Nice breakout of the resistance. And in the 5-minute chart, let's see. Okay, it's retracing backwards. But if you put the stop loss below the previous low, that will be 20 pips. Okay, 20 pips of stop loss is okay, 28 pips. So I would prefer to take AUD USD to trade. But at the same time, I have to look at the strength chart. AUD and JPY and USD looks like, yeah, AUD to JPY is more volatile than AUD USD. So in that sense, AUD JPY is better. So I would wait for the pullback on AUD JPY to one of these Fibonacci levels. Then once I confirm the pushback, then I would enter the buy so that I can have, you know, tighter stop loss. If it's 23.6 pip bounce, that will be 32 pips of stop loss. If that will be 38.2% retracement, that will be 26 or 27 pips of stop loss. So I prefer to take, you know, I prefer to wait for the discount to buy in this case. If it takes off, then oh well, you have to just let it go until you see the next trading edge. That's what I think of. Yeah, but yeah, anyways, yeah, that's I guess that's it for today's live stream. Time flies. It's already 50 minutes so far. Okay, so yeah, once again, thank you for joining, everyone. I'm sorry I saw many other comments, but I couldn't cover everything. But I hope you learned something new from today's live stream. So for those who are Ichimoku members, there will be Ichimoku membership live after this, which happens in about 8 minutes. So I will see you there. But for those who are joining public, I will see you on the next one. So until I see you, either way, please stay healthy and stay safe. And also, stay gold. All right, mata ne everyone. Bye for now.